Welcome, welcome, welcome. We are back. Thanksgiving tomorrow. The market is closed, but it was open today and it will be open for half a day on Friday. We had FOMC minutes today and it's getting a little bit crazy. There is a big warning I'm going to be giving in a little bit about what's happening in the market. Keanu Trades in the chat. What's up? Make sure you go check out Keanu Trades on Twitter Spaces. He's also doing a little Black Friday promo right now. Go check that out. He's been crushing it. Great to see you in the stream. Vibes in the chat for sure. And yeah, there's a few tickers I'm going to talk about tonight that are showing me very interesting charts. We're looking at one of them right now. So there are names I think that can stand out in the short term, but the overall market, I'm getting concerned. It's been a great rally. It's been fun, but I'm getting concerned. I'm going to tell you why. I've kind of already been hinting at it for a while, and we're pretty much at that point now. So risk management is key. All right, let's get started with crypto and then other markets. And then I'm going to talk about the stock market and individual stocks. If you have any stocks you want me to talk about, get them in your head, get them ready. And I'll do take requests in a little bit as well for this Thanksgiving special. All right. My way to give back to all of you is whatever I do know about charts through this live stream. Okay. So let's get started with Bitcoin. I think it's looking pretty good. All right, you're in this downsloping channel. The MACD is getting closer to green. You've got some classic bullish divergence on the RSI. On the 4-hour, we actually did break out of that triangle. It's technically a bearish pattern, a descending triangle, especially in a bear trend. It's a bearish continuation pattern. Typically, the probability is that this happens, but it didn't. It doesn't always happen. And sometimes when you have classic bullish divergence and you're oversold, then you can get a break to the upside. And that's what you're seeing for right now. There's not a lot of fall through price action so far. But another thing that happened, and I talked about, I can't even speak right now. 1 second. Let's have some tea. Another thing I talked about last night was this inverse head and shoulders very quietly and quickly on the 1 hour. You can see you had it set up over here. And then right over here, you broke out of that neckline. And that's kind of set up this larger time frame breakout. So that's what you're seeing right now. You even have 1 hour hidden bullish divergence. So very quickly, the 1 hour, the 4 hour, the daily, they've changed in my opinion. The only thing is you're not at any big level whatsoever. You're literally in the middle of nowhere. There's nothing historically at this price point. And then if we go over to the weekly, maybe, just maybe, if we have a decent weekend, you could end with something close to a bullish hammer, but it's way too early to tell. And then moving on to Ethereum, this is starting to look like a potential double bottom. We've got two pretty well-defined lows on the daily time frame off of 1070. Same thing here, you've got that MACD moving closer to green. And on the 4 hour, you're still testing. Bitcoin already broke out of its triangle, but Ethereum is still testing its triangle breakout. And Zeke in the chat is asking thoughts on the weekly bearish divergence for Bitcoin. I think I might have talked about this last night. I'm not too sure. It is there. I think there's other variables before that though. So you have this 14K level, even if this does play out, and worst case scenario is you break under 14K or 13,785. But let's say it plays out a little bit, you go down a little bit more. Even if this triangle plays out, maybe like a short-term move just to retest its previous support as resistance, then we sell off again, the hidden bearish divergence plays out. Still, you could get a move over here down to 14K. And if anybody were to ask me what's the price point where you would be thinking about buying Bitcoin at for long term, I'm hoping for 14K. That's really the only big level I see over here. It's just a level where you can manage risk. Even if that breaks, you got a little level down over here around 12.5K. So between those two levels, that would be only about a 10% loss just to retest the second level. And again, we're talking about Bitcoin, which was pretty much at all-time highs almost exactly a year ago. So we'll see what happens with that, but it is something to note, which is a good point, Zeke. And then moving on to other markets, we have the US 10-year. We talked about that bear flag on the 4 hour. That's currently playing out. You're retesting lows of this short-term downtrend. Again, 3.5% is the next level I've been talking about on the stream. It's the level I'm still watching. Crude oil just going back and forth between the $76 support and the $82 resistance. I've had those charted for a while. And pretty much for the past 4 days, even going back and forth between the two. Notably, XLE is still holding up. It's still testing this huge resistance zone, even though crude oil is not dumping, but selling off. So one of them might start to follow the other in the next few days. That could be something to look out for. However, just a little bit of education here. The one thing that does stand out between all this, you're getting a lot of fake breakouts and fake breakdowns, but this is what really stands out in my opinion. On this bullish pin bar candle, you saw your highest volume since pretty much September 23rd. That is something to note. It shows that even though you were selling off, a lot of buyers stepped up in preventing the breakdown of this $87 support on the XLE. So energy is still doing its thing. I know we looked at CLF last night on the stream and it was up 2% today. I talked about how it was kind of breaking out of this wedge. You've also got a little bit of an inverse head and shoulders structure. So despite the bearish things I'm about to say about the market, there still are names like this, which are kind of doing their own thing, and they already have been doing their own thing throughout the year, despite the market being in a bear market. So let's move on to metals next. Gold did bounce back a little bit today. This actually could turn into, or maybe already is, it already has broke out of a 4-hour bear flag, or bull flag, not bear flag. I'm talking a little bit too quick right now. This caffeine's hitting me very quickly, but you did get a little bit of a 4-hour bull flag breakout for gold. This is a textbook bull flag with hidden bullish divergence. You might see some more continuation off of that. Silver as well. We really zoom in here, a little bit of like an inverse head and shoulders here. So that's getting a small move as well. It's trying to get back above the 200-day moving average if that holds, because you're also back testing these previous highs as support. If that holds, that could be very big. So keep an eye on that as well. The dollar currency index is pulling back into the $105 support level. Kind of like a bear flag here as well, just like that. And that's playing out right now. It's retesting its lows of its downtrend. You got the 200-day moving average just under you, around 105. And then finally, for the separate markets, the Hang Seng Index, it's just in this quiet zone. Nothing really is going on there. So let's talk about stocks now. Joel says, which is the MACD indicator you were using that shows the divergence? It's undershots indicator. I forget which channel it's in. I think it might be pinned in one of them. It's somewhere in here. One of the mods probably knows where it's pinned. I want to put it in the links channel. We should do that. But it's called, I can actually just tell you the name of it. It is called, maybe we could just do this. I'm trying to see how I can like pull this up. Right over here. It's just called MACD divergences by undershot. Right there. So that's what it is. Thanks, Zeke. Alright, so let's talk about what's going on with the SPY. I hate to pat myself on the back, but if you've been watching the streams, the first thing I talked about was the distribution range, and then the second thing I talked about was this bull flag and all the 1-hour charts that were setting up for breakouts. Pretty much all of them are currently playing out. And I said, breaking out of this flag will probably take you up to at least test the top of this distribution range. And again, this is the distribution range I was talking about. And for right now, you're actually testing, you already broke out of the bull flag and that already played out, but right now you're testing a breakout of the distribution range. We can even go on the daily and you can see this was pretty much your range of distribution. You're very close to breaking out of it, which is all fun. It's all good. And it's okay. You also back tested the neckline of this cup and handle breakout. It's kind of like a break, hook and go. It looks like there could be a little bit more room here. You're very close to testing that breakout right now. Futures are slightly green. The issue, however, are two things. Number one, even if you do go a little bit higher, you've got a plethora of resistance above you. I hope I used that word correctly. Felt smart using it. But you have the 200-day moving average. You have this zone between 406 and 411, which is a lot of lows and highs from the past couple of years. You've also very quietly got this gap fill around 408 from the gap down on September 13th. And of course, you've got the supply line, which you rejected every time you've touched it. So yes, we did just get a back test. We flipped the previous resistance from over here into support. We're moving higher now. These are textbook breakout signals. The market is breaking out right now. That is taking place. I just have trouble believing in this rally lasting much longer because of that resistance. So I think you still might have a little bit left in the tank to get up to at least test these areas. And that's the only way in which my mind can change is if you break above that. So once we, if/when we get up to this area, which is very close at this point, and if the breakout plays out, that's where you're headed to next. In that exact area that I just drew out, I'm going to be bearish. There's just too much resistance in my opinion. All right, however, if you just do a little something like this, I flip back to bullish. And that sounds crazy because I'm bearish at a lower level and then I go bullish when you go to a higher level. It's because that's where all the resistance is at. I think if you can somehow break above that, which maybe this partial decline in this descending broadening wedge allows you to do so, then you have all of this room over here. You even have a gap fill from August 22nd to be filled up there, and then your next resistance is like 425 to 430. So it sets up a lot more room on the chart. But until we break above that, I'm going to be bearish. That's just how I am. And what's another reason for me being bearish, unless we break above this, I'd say 411 price on the SPY, the VIX. It has completed the 4-hour bullish bat. As you can see over here, it's also filled this gap from August 22nd. It's here. We are at the gap fill. You are also oversold on the 4-hour chart. So just when you're approaching resistance on the SPY, you're also hitting a bullish bat pattern completion zone on the VIX in a pattern that's been developing for 3 months during a bear market. So since this is the VIX and it's a bullish pattern, that's technically a bearish pattern for the market. So bearish patterns in bear markets tend to outperform bullish patterns. So yes, we are having a bullish breakout, but there is a bearish pattern on the VIX. Or there's a bullish pattern on the VIX, which is a bearish pattern for the market. It's very confusing, I know. Or I'm just making it confusing. But that's why I'm starting to get a little bit worried for where we're at in the market, at least for the next couple of weeks. I just have a hard time seeing this completely fail. Even if you do go lower, you have some more support around 1950. If we go back, this is the same level you bounced off of in April before a huge spike up on the VIX. Same thing happened over here. This is really, like, if I were to just draw a zone here, this is the zone in which pretty much the whole entire bear market we've seen since the beginning of this year. Every single time you come down into this zone, that's been roughly your top for the market short term. So we're just getting the same signals we've been getting all year. If we just look at this as one long range, right? You're at the bottom of the range. What could change this? You could break down from this range if you break out from this area of resistance. If you break out of this, that is when, not from a literal standpoint, but from a pattern standpoint, we're actually switching from a bear market to a bull market. It sounds crazy, but if we were to just look at this bear market as the price action within this wedge throughout the year, right? Breaking out of this pattern for literally the whole entire year, almost exactly, would change us from a downsloping pattern into an upsloping, not pattern, but trend. And then at the same time, let's say you were to do that, then on the VIX, you would probably be breaking this zone I just drew out, which means you'd be breaking under the range of this bear market. So that's what we're pretty much testing right now. We are actually at a level in which not just the short-term trend or whatever is at a make or break area, this whole entire bear market is at a make or break area. That's how important the area in which we are currently at is right now. So I just wanted to get that point across. This is probably the biggest test for the next couple of months that we're going to see for the market. If we continue to do what we've done the whole entire year, this is going to happen. If we don't, then this happens. And then we'll take it from there. Honestly, I'm talking like I think that this is going to happen because I think there's a higher probability of this happening. But I actually hope that this happens. Trust me, for the sake of swing trades, I hope that this happens. But I'm just thinking that the last 3 or 4 times we had the same exact formation, that's when we topped out in the market. We go over to the SPY, you are still showing decreasing volume. If we pull out the upper Bollinger Band, you're very close to it. It lines up so perfectly with the 200-day moving average. It's just like everything's lined up here. I don't know. It's like the composite operator is just playing one huge game right now. So it just makes me think, what's next? What is next? Moving on to the Qs, they were up 1% today. You got some follow through price action after the back test of the resistance breakout. And I did talk about this last night on the stream. I did say it looked pretty good short term. You're getting the price action up. I think your next resistance is around 294. You do have some potential classic bearish divergence, it seems, which is confusing to me because you're at a lower high. So I'm not sure what this is tracking it from. So I'm not going to actually consider that for right now. It's just bearish convergence because you have a lower high on price and the oscillators, unless I'm reading that wrong. So I think there's maybe a few more points of room, but we're getting closer and closer to that resistance area. for the overall market. The Russell 2000 is currently testing the 200-day moving average, very close to the MACD crossing red and confirming hidden bearish divergence. And then the interesting one today, after the bullish hammer we talked about yesterday on the stream, which, I mean, if you really look at it, it kind of filled the gap on the daily, gave you a bullish hammer, and maybe you could even, on lower time frames, look at this as a little bit of like a wedge. You got some fall through price action, 3% bounce today for the ARK ETF. I'm not trying to get too ahead of myself because it's done this 4 times and then just sold off again, but it's a good start. For some reason, it is continuing to hold the demand line of this technically bearish pattern on the 4-hour. It's still holding, so we'll see what happens there from like an intraday standpoint today for the market. We did have those FOMC minutes. You saw a pretty decent 0.5% move higher on those minutes, and then you kind of just consolidated for the rest of the day. So that was really just the intraday price action. We'll see what happens, not tomorrow, but on Friday for the half day. And now let's move on to individual names. Fisker, flat today. However, it's starting to get towards the apex of this wedge. Your classic bullish divergence is close to confirming. I talked about this before, pretty much the last 2 nights on the stream. Higher low, higher low. If this wedge plays out, that will be another higher low. This is the type of move that could get you back above the important support level. If we zoom out from all the way over here, and if you can't get back above that with 3 higher lows, a high short interest, a wedge that you've already broken out of and fallen back into, that is beautiful. That is beautiful. Production has already started. This is kind of, just like I was saying, like one of the most important times for the overall market from a technical standpoint. Same thing for Fisker. Because if this fails, then you're headed back down to this support level for the 3rd time. And if the market starts selling off, then you might even crack that support level. So the chance of all of this stuff on the daily playing out kind of comes down to this little price action, at least for right now, that you're seeing on lower time frames. So we will see the classic bearish divergence I talked about over here. It is playing out, but if you can get that curve to start taking place, you're already outside of the wedge. That's all you kind of need. So we'll see what happens there. And I did actually alert a new swing today. I hinted at this last night on stream, but AMD, all right, it has now reclaimed the $72 support level. You can see these arrows that are showing you how important that support level is. It broke above it. It back tested it. It held it for 4 days. Now it's moving even higher. It's got this gap fill over here around $83. And if we zoom out, while you're doing both of those things, you're also testing the breakout of this wedge you've been in since the end of last year. On top of that, you go on the weekly. You have classic bullish divergence that just confirmed, and yeah, and a textbook bullish bat. I'll just make sure it's textbook. It's pretty much textbook. So that's why I just put out a new swing on AMD for all of you today. It's a public swing. I also put out a private swing for premium members. If you're interested in that, there's the Black Friday sale taking place right now. Annual memberships are already 30% off compared to monthly. If you use code Black Friday at checkout for annual, you get another 35% off that. So basically the sale is 35% off annual, which is already 30% cheaper than monthly. So you can do the math on how that works together compared to monthly. But if you're interested, I know that's a full year's commitment, but again, you're getting a 35% discount. So if you have any questions, just DM me. But that's going to be available to all of you until Saturday if you want to take advantage of the Black Friday sale. And just explaining this AMD trade a little bit more, I put this first target right under the 200-day moving average. The second target I put right over here, you can see you have a couple of these highs from the end of August and even some resistance here from April. And then the third target is right around 109 resistance, which is these highs over here. And then I put the stop loss very slightly under this most recent swing low that you just cemented. All right, so that's the new swing AMD. AMC, very similar name. All right, very similar name. I talked about this for the last week on the stream. You got the move today. There was a little bit of news that came out with Amazon and stuff. Amazon to invest $1 billion annually in movie production for theaters. So this news did come out, but again, I've been talking about this flag for so long. And today you actually had a very quick move in the morning where it already kind of broke out, went up here, and then it closed back under the supply line. And then you broke out again. You had a 6% candle, which was pretty nice. So finally, After a week of waiting, you got some sort of a move from this, but this again could just be the start. If this is your true bull flag, this could just be the start of a next leg up for AMC. I mean, on the 4-hour chart, this looks like you literally just broke out of your consolidation. This is textbook stuff. After breaking out of a large wedge, this is exactly what you want to see. Typically, what we've been seeing this year is these stocks, they break out of large wedges. They just create a bear flag. They go like this. They create their bear flags, and then they do this, and this, and this. So to get something like this is new. You don't see that. You haven't seen that a lot. It's what you want in continuation. It's what we were used to seeing almost all the time at the end of 2021. And now we're starting to see it on a few names. So giving you continuation. It's very interesting. All right. And then also another name I talked about yesterday, Manchester United. I talked about this inverse head and shoulders after the Ronaldo departure news yesterday. And it was up 26% today. It gapped up, which was pretty much your breakout of this inverse head and shoulders. This is why I talked about it. The reason that Manchester United is up is not because of this inverse head and shoulders. It's because of the news and whatever else is taking place. But the fact that you could have also timed that move with the breakout as soon as you saw it broke out. And look, it almost literally went up to the next major resistance zone I drew out last night on stream. This is where technicals come in handy. They might not be the reason for the move to take place, but they help you position yourself on the train before it leaves. And this is just a prime example of that. So that was just another name we talked about last night. I also talked about Tesla. On the daily, there was a little bit of classic bullish divergence. And then on the 1 hour, we talked about this wedge. It gapped up as well, just like Manchester United. And that's what happens sometimes. Like you get the breakout on a gap up and then you can just keep going. It is a little bit concerning though, because like if this is where you open, like you're worried, like do you fill the gap first and then keep going? That's why patience is important, but the moves can happen very quickly. And that's why I prefer being a reversal trader, because as a reversal trader, you're typically in just before the breakout instead of waiting for the breakout and then contemplating whether or not it's too late to get in. But there's pros and cons to both reversal and continuation trading. If you want some of those arguments, my free course is in the description. Yeah, if we zoom out over here on Tesla now, you have that classic bullish divergence. Let's delete all of this stuff over here. You could actually have a larger falling wedge forming. Something like this. So just a classic wedge slash divergence setup. You know, if I was just looking at the daily, I might actually put a swing on this, but this weekly is still very concerning to me. But who knows? Classic bullish divergence is possible. You could still somehow close back above this range. If you can hold 180, you're actually okay. It's just I want to wait a little bit longer to see whether or not it can. All right. The guy says anyone want to get slapped in Modern Warfare 2. Nobody here is going to beat me in Call of Duty. I can't play Call of Duty right now. I don't really have a way to play Call of Duty right now, but once I do, I'll face all of you. I'll face all of you. Nobody's beating me. Just saying. Let's see. The guy also said, I am loading SPX to let the VIX roar. I wish you luck. Anna saying I had a swing on AMD too. Glad to hear that. Well, hopefully it works out. The guy said OG monthly rate is more expensive than annual Black Friday sale price. It's a good sale. It's a good sale. If anybody who is in monthly wants to switch over, I already put it in the chat for all premium members. If you're in monthly and you want to switch over for 246, or almost maybe like 70-80% of you, that actually is cheaper. So I think that's around, like, if we do 246 divided by 12, that's around $20 a month. There are some people that are, I think, paying literally $20 a month. So if you just want to switch to annual, that works. There's maybe only a few that are paying, like, maybe less than 5 to 10 that are paying less than $20 a month at this point. Those people, you got the discount. I don't need, like, you got the most insane discount if you're paying under 20 a month, because right now it's $50 for your first month. And that's what I've said. I've said the whole time, prices will go up. But yeah, if you already are in premium and you're paying monthly and you want to switch to 246 a year, which is most likely cheaper for you, just double check by multiplying your payment by 12. Just DM me by Saturday and I can help you out with that. But you're literally seeing it right here. The prices will continue to go up after this sale. Not right after the sale, but later this year I will raise the prices again, because I haven't raised the prices since like April, I think. And I used to raise the prices like every month. So we're saying $20 is a steal. A couple of years from now, $50 is going to be a steal. So if you want to get in during the sale, you have till Saturday. All right, Black Friday is the coupon code to check out at annual. And let's see what else is in the chat. Seek saying you need a PC. I'm going to get a PC next year. So at some point, I'm going to get a PC so I could beat all of you in Call of Duty and have higher quality streams. But I will, that is on the list. All right. But yeah, let's keep going through large caps for a little bit now. Let's look at Disney first. And you're testing a break back above 100. You can see there's a lot of lows at this level, some highs here as well. This is a big test. If Disney can break out of this, you've got confirmed classic bullish divergence, got this supply line. So if you can get a move like this, that could set up the bottom for Disney. It sounds crazy, but I mean, look at this. It's your classic market wave structure. I mean, this might even be, it's a mix of a bat and a Gartley. It's like a half harmonic, or I don't even know what you want to call it, but this is it. This is the low risk, potential high reward opportunity. Again, I'm not putting out a lot of swings right now because I'm still scared about everything I just talked about with the market and the resistance. But I'm showing you the names that if you are bullish, unlike me short term, if you are bullish and you think that this rally will just keep going until the end of the year, again, I'm never, if somebody has a different opinion than me when it comes to stocks, I'm very welcoming to it. That's why I'm also showing you charts that we could do crazy things if the market keeps running. So I can say these bears about the market, but I'm also these charts that if I'm wrong about this being close to the top in the short term, these are the setups that could really run. And if I were to be putting out swings, these are the type of names I will be putting out swings on. We just looked at 2 of them. I'm just saying, not financial advice. But let's move on to Apple. This one's a little bit different because you're really consolidating under that 200-day moving average. I would prefer obviously above because you haven't really been able to get back above the 200-day moving average since you broke it at the end of August. However, 4-hour chart, inverse head and shoulders, you're testing a breakout right now. Just saying. Keanu in the chat is saying, raise your prices, please. Keanu's been telling me for the longest time to raise my prices. The price raise is going to come soon. I just had to do one more sale. I'm too nice. I know I'm too nice. I just had to do one more sale. If you want to take advantage of it before I'm forced to raise my prices based on what Keanu Trades is saying. Links in the description. Your mic is going static. It might be because I'm like hitting my table. I'm like, I don't know if you can hear that. Hopefully it's not too bad. Maybe you can move it closer. All right, so yeah, that's Apple. Let's move on to Amazon, which on the 1 hour I talked about this wedge breakout. It is breaking out, and it already has broken out. Now you're getting the price action, but kind of turning into a bear flag. So moves already kind of been happening. We'll see what happens. The next level is already charted out. Microsoft, beautiful bull flag breakout, and this is the big one. All right, this is another big one on the daily. You're testing a breakout of this zone. You've been under it since you broke it in the middle of September. You already broke out of this wedge. You back tested it. Now you're coming back up into the zone. If it gets above this 252, I've been saying it nonstop. There's room to 267 if the technicals play out. Their room is there. It's testing it. So despite how the indices are looking, these names are kind of looking their own way for the first time in a long time. So we'll see what happens. And then coin, I talked about this last night on stream. I said you're at pretty much your lows. You had 4-hour classic bullish divergence and a wedge. Nice little 5% day today. It's only a start. But it is getting closer and closer to testing this wedge breakout. You've also got classic bullish divergence. I mean, this just feels like a watch list stream at this point because there's a lot of stocks to watch right now. It's just crazy to me because I'm saying all this about the market, and then we're looking at all these charts and a lot of them look pretty bullish. So it is a little bit confusing, to be honest. And then we also have Google, which is testing a wedge breakout. Even if it does break out, you've got this resistance zone right above you around 100 to 103. So it's not like everything is good, but it could test that breakout. It is something to keep an eye on. And kind of that inverse head and shoulders looking structure as well here, as you can see. Nothing perfect, but it's not too bad. The others, we look at like the meme stocks for a second. GameStop is still in its range. It was up a couple percent today. Kind of broke out of a little wedge here, and that's maybe playing out again. Let me reset my alert here. Above 28 is the move for GameStop. Get above that. You can see how long it's been consolidating here. The last time it broke above it went up really quick, really fast, or it went up a lot really fast. And then also CLOV down a couple percent today. It's just, CLOV is in its own world at this point. It's really disappointing to me. But you've held 121 for a few days. I mean, that's okay. You got 4-hour classic bullish divergence. We'll see if it can hold the level or not. I hope it does. And that's pretty much it for the rundown today. I want to do an early stream so all of you can get some good rest before you stuff yourselves tomorrow. And if anybody has any tick requests, feel free to drop them in the chat right now, and I'll take a look. Just again, this is the last time I can really remind you. Black Friday sale, 35% off annual, which is already 30% off before I raise prices. It's like a triple sale. It's already always on sale, and now I'm doing a sale, and then I'm raising the prices. Just saying. I don't know. Maybe it's stupid. Is it stupid? Is it stupid? Is it? Alright, so first one is CLAR. This is a classic and a stock, it seems. I'm not shading you or anything. It's just, you know, like, I've never heard of this name before. That's the only reason I'm saying that. But it seems like $8 was a huge level. You could see these highs here from 2017, these lows here from the COVID crash. It bounced off that level the first time and then it broke it. So under that level, it's a little bit weird. You've got this gap that already filled. Next support I see is around 630. You have a little bit of classic bullish divergence, but it's just about which one of these levels it gets to first. And then Mara, I actually do want to look at this because we already talked about how Bitcoin is starting to flip a little bit back towards bullish in my opinion. And that's the wrong one. One second. This one. It looks like it's testing this demand line. It's even kind of under it a little bit, I guess. I think the big level here is 533. You can see this high over here from August of 2020 and this low here from June of this year. That's probably the bigger level I would be keeping an eye on. And then SQQQ. This shark played out beautifully, and you actually might have a cipher now. Just a harmonic after a harmonic. Pretty much a bullish cipher. It's not perfect, but you had a shark that played out. Now you have a cipher, and you got a small move off of the pattern completion zone already, but you're kind of bear flagging here. You already broke down and you rejected the 200 moving average. So let's just say for argument's sake, you do sell off a little bit more, then the SPY rallies up a little bit more, this distribution range plays out a little bit more, but then you get up to the resistance zone that I already talked about, the VIX bat starts to play out, then this drops down over here, it makes a bullish shark like it did over here, and then the same exact thing that happened over here happens again. Like, even if this cipher fails, you still have that below you, and then even if that fails, you got support at 35, 36. So again, this is pretty much going against the market. This adds to the argument that I was making that, like, we're starting to see the flip where the bearish indices are turning bullish and the indices that you typically want to go up are looking a little bit bearish to me. So I don't know. And then the guy said, why is clown to wrapped ether banned? Also, can you check it? Because you sent a $2 tip. First of all, let's get some vibes in the chat. Just because of the tip, I'll take a look at it. You know, there's a lot of reasons why this is banned, but this is basically my chart on clown to wrapped ether. So hopefully this helps your investment choices. This is my chart. This is basically a puzzle, a dinosaur puzzle pattern. And yeah, you can see it's got these super doji candle patterns as well, where you basically can't even see the candles. And there's a no divergence on the RSI or the MACD. And yeah, that's the chart. Great way to end the stream. Thank you again for the tip. So thank you for watching the stream. Happy Thanksgiving to all of you. I'll be live probably like next Tuesday, so a little bit of a break. If you want to join me until then, just join the Discord. It's free to join. And if you want a deeper look inside my mind, then premium is on sale. Seek.
Just vibes. Thankful for all you do.
And I'm thankful for you as well. I'm thankful for all the mods, all of you supporting me. Thank you very much for the tip. Let's get some vibes in the chat for Zeke with the $5 tip. Zeke is amazing if you guys use the timestamps after all the streams. Most of the time he's the one that's doing them. So thank him in the chat right now. Do it. Do it. Thank him. All right. Thank you all for watching the stream. Thank you again, Zeke, for the tip and the guy. Have a great weekend. Hopefully some of you have off from work on Friday too. You get a nice little 4-day weekend. And we'll see what happens next week. So I'll see you probably next Tuesday for the next stream. Watch the course. Also, that last video I made, how to find options day trades, it's underrated. That's all I'm saying. It's underrated. If you haven't watched it, go watch it. You have the whole entire weekend to watch that 30-minute lecture on how to find option day trades for yourself. So go check all of that out and check out all the links in the description. Hit the like button, hit the subscribe button. See you in the Discord and on the next stream. Peace out.